Well, the Fed, as we were reporting, spent $41.8 billion on the TALF program, which is just about 4% of the $1 trillion the Fed said it would commit to the program. That's just one of the numbers we've nailed down as we at Bloomberg here try to figure out exactly how much taxpayer money has been committed to fight the longest recession in 70 years. So where do we stand? Bloomberg reporter Mark Pittman is chief number cruncher. You've been doing some serious investigating here, Mark. Welcome.
Thank you.
What have you found?
Well, the Fed's having to lighten up a little bit, and they're able to. The banks are a little healthier, and the temporary programs that they sort of did on an ad hoc basis last year are starting to, be able to be taken off.
So the big number is 1.6 to 1.2. Market shrank.
That is for the MBS purchase program.
Right,
okay?
right.
What we've got is the total numbers here are roughly it's gone from 12.7 to 11 trillion, and this has been it's a great move. It's really good. Confidence is coming back. So people are feeling relatively good about it. But the banking system is still needs federal assistance all the time.
What are you hearing, though, with this, with the unwinding of the MBS program, what it's going to do to the housing market? We had existing home sales and new home sales come in lower than expected and disappointing, weighing on broader markets today.
This is a serious problem. The Fed's got to get this right, and they're going to try. They've got another $565 billion that they're going to be able to buy under a $1.25 trillion program. And they've extended it for another 3 months. And they're hoping to draw this out and make it gradual so that we don't have a big shock to the market. If you can't sell bonds in the housing market, you can't get a mortgage. And that's just the way it is. Besides
the MBS program, obviously the Treasury buying program is going to wrap up as well. The GSE debt. What other tricks does the Fed have up its sleeve?
It may not need any more. These are a significant amount of money going in the market. And what happens is banks have the mortgage-backed securities on their balance sheet. And what they do is they receive cash for these. And so then the banks could put this cash to other uses. The Fed takes it on their balance sheet, and they may even receive a return for this. It isn't much, 3-4%, but
so
it's
while
something.
It's helping the banks, the housing market itself, the other side of the coin, is still struggling.
Yeah.
So, all right, we have to leave it there. Mark Pittman, Bloomberg News. Thank you so much for coming on today. Appreciate it.